code. Okay. Okay, so let's look at the last part for today, which are the rising wedges. But I hope you understand. I want you to be with me. Ask where you don't understand. Just ask, how am I connecting? What are you considering? You can ask such questions when connecting your trend lines. What consider, ask such questions.
So do you consider support and resistance zones, or you just trade the trend lines?
The thing, yeah, you can actually consider that, but mostly what I consider is just the trend. I consider the trend, of the market, and then I connect my trend line. Then all I consider is just the breakout. You know what I mean? Mostly it doesn't matter whether, like, for instance, but when it happens on a support level, it's also, or a resistance level, it's also an added advantage. You know what I mean? Like, it's also a confirmation. Yeah. So, but mostly what I consider on a trend line is just structure, market structure. When it forms a reversal pattern, I'm there. I'm there. Forms a reversal pattern, you're there. Because they
All
move.
right, then.
Huh?
Then another thing is, let's say, for example, you're starting off with a $10 account, right?
Yes, sir.
How would you take the trades? How many positions would you take? Maybe if you're starting off with a first trade and all of that stuff.
Okay, so
Could you break that down?
okay, so I think I've got I wrote that on my notepad. Yes, so I'll actually share with you. But yeah, if you're starting with, let's say, a 10, which I don't advise to start with 10 though. I advise maybe starting with a 20, if less. I mean, 20 is okay. Because 20, you have got two chances. A 10, for me, a 10, I just take one trade mostly. You know what I mean? A 10, I just take one trade. Because yeah, the returns. But if you're starting off, let's say, with a 15 or $10 a year, all you have to do is you have to make sure, mostly with me, I'll use the smallest lot size. You have to consider the volatility of the market. You know what I mean? Use the smallest lot size. You can maybe add position depending on what you're trading. So like I wrote down the lot sizes. It's very important to write down the lot sizes. You know what I mean? Because sometimes you find to say you're trading a very volatile market and then you're entering like a crazy person, just entering slots like that. So before it actually even decides where to go, you find to say you're out of the market. You know what I mean? So you have to make sure saying you consider all that. It's very good to actually even write down lot sizes to use, like you should consider doing that. So like for this volatility 50, this one is not too volatile like that. So you find to say you can even open, maybe if with a $10 account, you can even open two slots over probably 0.50, two slots of that is okay. Two slots, excuse me. So two slots of that is okay. The thing is, what you should consider is managing your risk, Like if you learn how to manage your risk, very nice. You might grow your small account, you know what I mean? Like if you just learn how to like manage your risk. Don't over risk, don't over leverage, just no. Sometimes it's boring seeing small profits, but those small profits actually accumulate to big profits, you know what I mean? Unless you want to flip. If you want to flip, yeah, well and good. If you want to flip, you see an opportunity like this, you can take it. Sometimes it goes in your way. Like I've done that also. Like I've done that. I've come in the market with the mentality of just flipping. I've got maybe a $15 and I just risk, open slots like a crazy person, which I don't advise, by the way. But you find to say if you risk just short movement like this here to here, you find to say, okay, your account is maybe 100 already. You know what I mean? Like I've done that before. Dependent. But if you want to grow it, just use the smallest slot that you find to say if you've got a $10 account, use maybe a slot of one here alone. Reaches here, you make about maybe you double your money or maybe even triple. Just this movement, you're good. You go to another one because you'll be seeing this. All you have to do is develop patience. Trust me, because you enter too early, it's a problem. So develop patience, wait for the candlestick to close just like this, enter your slots, put your stop loss here, you're good. So like, I love the question you asked, do you consider support levels? Yeah, I think you can consider those. Because if a market is standing on a support level, you know what I mean? You see a reversal on a support level, meaning that's an extra confirmation, you know what I mean? Do you understand what I mean?
Yes.
Yes. On the support level, you see, let's say here, this market was coming down. This was the support level you can consider. Have you seen this? I think you can see it from here. Have you seen this? This here. This was a turning point. Have you seen this? You might
Yes.
consider this. You might consider this. And then you see the market forming a reversal pattern. This is the reversal pattern. This is a double bottom right here. Who breaks here, you would have been in. Don't even think twice to say, no, it's still going down. You're there. It showed you a reversal pattern. You are in. Stop loss here. Take profit. You just target this, the nearest resistance level, which is there. Just target this. You're there. You tip it there. So you have to put it slightly above that zone so that your take profit can be hit. Sometimes the market performs. You find to say it just reach near there and it falls. But while you're putting it here, where I'm showing you to put it, you can say in most of the times you've been hitting it before it can even actually turn. But yeah, so in this session, we're going to be talking about the wages a lot, the rising wage, the falling wage, and all that. So the goodness with these wages, they give what we call 90% probability. They give 90% profits. You find to say when you catch a nice when you catch a nice wage, you find to say your returns will be massive because it goes all the way up to the 90% rule. You know the 90% rule? These ones here. There are a lot of these in the market. There are a lot of those in the market. A lot of these in the market. There's a lot of these in the market. So when you see a market moving like this, forming, let me just go to this. So when you see the market moving, they're actually forming wages. This is a rising wage just right here. So when the market is forming a wage, the safest entry is after the breakout. I'm seeing just slightly after the breakout here closed, so you'd have entered maybe from here. Yes, let's see. Stop loss, you might consider this here, because the market came, hit this trend line, came down, formed a support level here, went up, formed this resistance level, then it came and broke the trend line. So your stop loss should be slightly above here. Consider that there. Then how you put your TP is all the way to the starting of the wage. That's what we call the 90% rule, here. So you put it all the way here where it started from. The market usually hits the 90%. So you should learn to hold these wages. Whenever a wage breaks out, most of the times, it's just in rare cases that doesn't hit the 90% rule. So you have to hold all the way up to the 90% rule, which is here. So if you see this movement in an hour time frame and you catch the breakout, hold to the 90% rule, because usually it will hit that and it will give you massive returns, guys, like no cap, like massive returns, Usually you find to say, even this one, it can qualify to be a rising wage, just here, though it fakes to the upside, but there's room for adjustment. There are these ones that are not clear, but these ones you can trade them as a double bottom. If they show you this, you can still hit them with the trend line. Here it breaks your trend line from there. See where it broke from. You would have entered from there, and actually, where is your nearest support level? And this is a clean trade because the nearest strong level I'm seeing was this one where the TP was. See this one here. This was strong. This was a turning point. So you have to consider these points here when you're putting your TP. So here, see, the market came and turned from here. That's how you consider. TPs, you know. Don't just put TPs how you want it. You have to consider that. Because even this was a correction. See, this was a correction from the wedge. You entered from the breakout, probably, boom. Then the normal TP was supposed to be here. You see, the normal TP was supposed to be here. This was a 90% rule. But actually, you have to consider the higher time frames also. The reason why I held all the way down there, because I knew to say this market is supposed to respect the higher time frame. Let me just show you what was happening. Where was the part? Where was that part? Here. So I was expecting a reversal just somewhere here because the market came and touched my trend line here. You know, it came my trend line, touched my trend line. So I was expecting a reversal. Let me show you. Just run a little bit. So here, have you seen? So I was expecting a reversal somewhere, these areas. So I knew to say a reversal is coming soon. So when this wedge formed here, see? So when this wedge formed actually here, when you say if you look at it here, you notice it has got how many touches already? It had 1, 2 touches. In fact, we did 1 touch, which broke out. The second one, which just touched this. And this one here, it formed a wedge, a rising wedge, just here. From the wedge here, just here, then started falling. Then there was another correction here. Then it fell all the way down to this level. You know, it formed all the way down to this level. Formed another wedge here. So the wedges give up to the 90% probability, like I told you. That's why you have to like hold them, because it will go all the way up to the 90% rule, which is a 90% probability. So like here, this was the wedge. Let me put in 1 hour, 1 hour. So you have to consider, even if you see these wedges in bigger time frames, even better, because now it's like an extra confirmation for you. This wedge. See this wedge? It broke from here, you know, went all the way down, came, you know, played around here, but it went all the way up to the 90% rule, which is here, the starting of the wedge. This information is very powerful. When you catch a wedge, trust and believe, hold. It's just in rare cases that you see to say, no, it broke out and turned. In rare cases, like the one we caught on VIX 25. I remember I sent a signal just recently. That one didn't go. That one didn't go down. It's still going up. It just faked out, then started going up, and it's still going up. But in most cases, you find to say they go all the way up to the 90% rule, especially when you catch them in a trend line like this. Catch it in a trend like this. So if you want, you can backtest for yourself. You get to notice to say, if you're trading these things, they go all the way up to the 90% rule. And then you can also backtest the, you know, double bottoms and double tops, because those ones happen a lot. The wedges, they don't happen a lot, but those ones, every day, you'll be seeing them. Especially when you adjust to 15 minutes time frame, you find to say they're everywhere. They're everywhere. You'll be catching trades like crazy, no care. But then you don't have to be trading always. That's the thing. You can't be trading always. Because even here, you'd have caught this. It's a very, an example here, you know, when the market was coming down, you would have put your trend line just here, probably didn't break this. So you would have put it here. So you have to consider, it has to be a breakout, you know. Like here, if I was trading this, I would have entered from here. I was trading. Let me show you. Okay, let me show you. So if I was trading this, I would have entered from maybe here. It broke out from here, you know. You'd have entered stop loss slightly below here, and then TP, you'd have targeted, probably to be realistic, you'd have targeted this one here, because this is strong, this part here. Came both, went up, you know, came down, came to retest it again, so showed some strong. So you'd have maybe come out from there, or like I said, somewhere here, though it didn't touch this one, you would have fallen before it touched that level. This is the second TP, you know, because mostly it has to touch this level before it falls just here, but it didn't touch. See, it fell. But the first TP was hit, which is this one here, because check, the market came, made this support, went up, this resistance, now it's fallen. So you would have considered this to be your TP, you know? Yeah. So, yeah. So, guys, these things usually happen in the market. Like, there are a lot. Find them saying they're just forming, you know, forming. So, mostly, like, I hate taking trades like this. I love it when I see a clear reversal pattern. Because even this, you can take. As long as it breaks here, you have to enter stable TP, maybe consider this level, you know, you have to consider this level. But I don't like trading things that are not clear. You know, they have to show at least a very good reversal for me to trade it. What's wrong? Why can't I move this? I want to move this. Okay. Yeah, just here. You'd have considered taking this. You'd have entered from there after the breakout. This channel is very, very, very vital here. This is how you see these big traders you see on Instagram and what. This is what they do. This is what they do. This is what they do. With them, they usually use bigger time frames because they've got the money to do that, you know. Because this is how I've seen to say this is how this guy leadership Montla from South Africa trades. This is how Mamba trades. You know, like a lot of these big traders that you've seen, successive ones, this is how they trade. They know when to enter, they execute when it's time to execute, they know where to put their TPs, you know, they know what moves to target, but this is all they do. Trust. This is all they do. So, okay, so the entry confirmation
is the brand people that are there. It then they would do.
Come again?
It be blue what?
What are you saying? Okay. So yeah, so the confirmation should be the break of structure here. So now I want to give you other confirmation which are candlesticks that we consider, you know, before the entry. I think we're going to do it tomorrow because there are candlesticks that will tell you to say it's about to reverse, you know what I mean? There are candlesticks that will tell you that. To say, okay, this is a reversal. You know, when you see them, you're more sure to say, okay, yeah, it's likely to reverse. So I think tomorrow we'll talk about candlestick confirmation. But right now, this is the most vital confirmation, which is the breakout confirmation. This is the most vital one. But I also back it up with some candlestick confirmation also, you know. So we've talked about the market structure and the trend line confirmation here, you know. So we'll also talk about the candlestick confirmation tomorrow and see how we can help each other, you know. But otherwise, this is how basically you can trade and be profitable. Just this information alone would make you massive amounts of money. Trust. Just this information alone. If you can just take time to backtest, go back, even as far as maybe 2000, just be looking for these patterns, and then you're actually executing your trades. You find to say you're profitable like most of the time, and this is how you can stay profitable. Just identify. So like for this, you know, it's still going down. So it's even safer to look for sales. But if you see it breaking your trend line, when you connect it, it's an extra confirmation. You know, I like it. So when it falls like deep, you know, when it falls like deep, you can actually put your trend line just from here. Show them, you know how the market moves. So you find to say if it starts falling, you can put your trend line wherever it's going to go, probably here. But I'm expecting a reversal somewhere here, you know, somewhere this level. So when it comes to break this and shows me a market structure, that's a reversal pattern, I might execute a trade here, probably target this level, you know, here or the next level there, depending on what will happen there, you know. So basically, if you're just doing this alone, you're guaranteed to be profitable. So tomorrow I'll show you the other confirmation, and I'll get to show you the other breakout again for the flags. Mostly that one happens for the flags, and it happens how you can catch breakouts in currencies, currencies, US30. With currencies, I don't usually use this breakout because it has proven to say the stop loss is big for currencies when I use this breakout. Like I was backtesting for the longest, and the stop loss you find to say it's massive stop loss when I'm using currencies, because you find to say you're putting this trend line on an hour time frame. So the stop loss is big, what I mean, eventually. But there's a way we connect, there's a way you can trade them with a breakout strategy, just like this, but you don't connect your trend line like this. I'll show you. And that's how, I don't know if you know Mr. Naz. Do you know Mr. Naz 100 from Zambia here?
Yes.
No.
So I'll show you how he basically trades, because I know how he trades. I'll show you how he trades currencies tomorrow. And same thing. Just that for him now, you find to say for the currencies, the breakout is different. The breakout is different. How the breakout is different. And with them, they target pips. Currencies move with pips. You find to say they move about maybe 200 pips a day, maybe 100 pips a day, like that. So I'll show you how you can actually trade currencies with a breakout strategy. But with this strategy I've shown you today, this one alone, this is how these people you see, these famous these famous Forex traders that you see, this is what they do. This is basically what they do. If they're not using smart money concept, it's just this. But this is the best strategy so far. I've done smart money, but this one usually happens. Trust, believe. You find to say once
Do you trade smart money?
um
Do you trade SMC?
yeah, I used to trade SMC when I started, but then like I didn't fit with me. It didn't just fit with me. But yeah, I know how to trade it. I do consider order blocks with SMC sometimes, just for extra confirmation. I do that for extra confirmation sometimes.
Okay.
But mostly I just do this. This is just what I do. This is how basically Bandile, these South African traders you see, these guys, this is what they do. Just this. Just that with them, they have got massive amounts of money. So you find to say, just this, if they just catch this move here, break out here, catch these pips, it's a lot of money for them, 30K, just here, because they're risking, they're risking good amount of money. But that's how you start, because slowly by slowly, you compile your capital just by catching such moves in the market, and then you get to now get there. I mean, we're all getting there, by the way, we're all getting there. So it's just slowly by slowly practicing, but practicing makes perfect. Trust me, like practice will make perfect. Because if you're not practicing, you won't be seeing these things. It's like they won't be there. So you can see it form, and then you don't know what's happening there. You're like, okay, because even here, this you would have traded this if you wanted, because it confirms it has broken out. It's a breakout. Here you would have entered. Have you seen? It's a breakout. They actually they happen a lot, these ones. Even if when you just, there were days when I learned this strategy, there were days where I would just enter. I'm just targeting, maybe if I want to buy something, let's say I want to just buy something, I'll just wait for a move like this. Maybe I've got a $10 account. I'll just come here and target a move like this. Even just this, because the TP is here, slightly below here. Just here, this move, I'll just risk my $10. But execute, execute from here. And you find to say, my TP is there. Just this moment, I've doubled my account already. Plus, I'm out. I've made my money. I'm out. I could do whatever I want to do. Come back, look for other entries, like that. So we consider 15 minutes and 30 minutes. If you want to trade this, consider 15 and 30. Because for these synthetic indices, if you consider an hour, it's like the stop loss is a little bit big. And synthetic indices, if the stop loss is big, it's crazy for you. If it hits your stop loss, you're gone. So this is how you protect your capital and actually stay in the game for the longest. Just wait for this patiently. Wait for the breakout, breaks out, you're in. Sometimes even just leave pending orders. Sometimes I just do leave orders. Yeah, I do leave orders. Fine to say I just leave it maybe after slightly below above my trend line. It breaks out, takes me in. Stop loss, you just see how much you're willing to lose. Probably here, normal stop loss is down there, but you can even risk this down here. Mostly it doesn't come back here. If it comes back, then it's crazy. But there are trades that actually give headache because you find to say they'll just here. Imagine it breaks out, goes maybe here, starts ranging for the longest, comes back here and draw down. I swear, just here. But the good part is mostly don't break this trend line. So they might even come like this and come here, you've been draw down, but you find from here they'll go all the way up, hit your TP. So like that, when I was starting, trades like that would actually give me headache. You'd be like, ish. But then eventually. And if you know Vitado for him, Vitado, he trades this strategy. You know Vitado? Who knows Vitado from South Africa? Yeah, so Vitado trades this same strategy, but with him, he's strictly like him. Him when he enters a trade like this, the first, in this case, the first resistance level is going to see is his take profit. Strictly, he doesn't care whether it's just 3 candlesticks, 2 candlesticks, as long as he just hits the first resistance level, he's out. You know, because I was like, yo, how does he make his money, this man? It's such a risk crazy, but he knows how to manage his risk. That's the thing. So you have to know how to manage your risk. You gain experience as you are doing this. So him will be out here, bro. He'll be out here. He entered from there. Here is out. He's looking for other entries. So now you can even analyze maybe 3, 4 charts like this, and then you're just waiting for your breakouts. The breakout you're in, you get your profits. Another one breaks out, you're in, you get your profits. The breakout together, you just enter. As long as you know your risks, you're not risking crazy, you can hold, you can be trading 2, 3 pairs at the same time with the same strategy, and you still be profitable. Trust. So do you understand?
So does it work? Does it work with all the synthetics, or you have specific?
Okay, yeah.
that
So currently, they work a lot. It works a lot on volatility and jump and step index. Boom and crash, nah. Boom and crash, it doesn't work a lot, but it works though. Like some woman was trading boom and crash with it, and he was sending screenshots saying, "No, it does work on boom and crash." But okay, for me, I just don't use it there. So I don't know. If you love boom and crash, you can actually backtest and see if it works there. But it works a lot on jump. It works a lot on jump, and it works a lot on volatility. Even step index. You see it, you execute. Don't hesitate. Jump, you see a breakout, execute. I think even jump and step index, it's more accurate even there compared to even volatility, because sometimes volatility would even perform, but for jump, when you just see, you see, you're in. The only pressure with jump you find to say, sometimes it will jump, probably your what is here. See, if you didn't put your pen in order, you find to say, your trainer is here, then it just jumps all the way, maybe up to here. Find to say, yeah, shit. So mostly you find to say you're waiting for your retest, comes to retest, you're in, it's up to your TP. So, but yeah, jumps, it works, it works everywhere like that. So what I would advise you to do is just go on your charts, just backtest for yourself. Practice this. Then tomorrow as we come, you tell me about it. You see how strong this strategy is. And you see the returns, like the massive. And just target small movements. Don't target big movements, please. Because sometimes it's sad to see, you've been holding a trade, You've been holding a trade, it goes all the way up to even 50 USD, then it just retains. TDD hits you, you're out. You know what I mean? Sometimes it's just you knowing to say, sometimes even me, there are days that I would risk crazy. You say, maybe I'm trading a $50 account and then I enter mad slots. Just this movement here, find yourself made maybe $100 in profits. And then your TP is maybe 150. No, you can just take your profits. It's okay to take your profits, It's okay to take your profits like that. Don't even feel bad to say, no, it didn't hit my TP. Nah. As long as you've made money, you can come out. It's okay. It's good. It's good. As long as you're making money, because these moments you'll be seeing them. Now that you've known the strategy, trust me, you'll be seeing these moments like crazy. If you just like practice, backtest, you will be seeing these moments like crazy. And you'll be shocked how many you can catch in a day. You'll be like, oh, enter a trade, hits TP. Enter a trade, TP. Especially for those that don't have patience to wait. Yeah, this is the thing otherwise. So, but for currencies, I'll show you how we do currencies. I don't know.
Do you have any other confirmation
Confirmation. Like the confirmations, like
Yes.
I said,
Or once it breaks.
Come again?
I'm asking whether there is confirmation or once it breaks, you enter.
Once it breaks. So the other confirmation you can add is just market structure. Like I said, a reversal. You see a reversal. Once it breaks the reversal, you're in. You know? You've heard? Do you understand?
Okay.
Yes. Practice for yourself. You'll get to see. Once you see it, a reversal, you're in. You're in. It goes all the way up to your TP. Trust. Yeah, there are trades actually that will hit your stop loss. You see the reversal perfectly formed. You're in. You hit your stop loss. Yeah. Every strategy loses, but just know how to manage. That's why you don't have to risk crazy. You know, don't risk crazy. Don't risk crazy. Just risk normal. You're moving. You're fine to say you make money just like this. I think we're done for today. I don't know if I'll have to save this so that you can go back in case you miss anything. You understand?
Oh, okay.
Yeah, just yeah, you can just record it because on my side the network was just so bad, you know.
Okay, so yeah, I did record.
Same here. Same here.
I did record it, so I'm probably just going to maybe upload it, and then I can send a link to you guys.
But
Okay.
I have a question.
Okay.
Yeah, so if let's say you want to trade in a higher time frame, how much should be your capital?
For higher time frames, if you trade in synthetic indices,
Yeah,
oh, I think even close to, at least you should be starting from $50 going up.
$50.
Going up if you want to trade in higher time frame like that. Yeah, like that you can actually trade in an hour, but mostly just target 15-30 minutes time frame is okay. But for currencies, I'll show you. Currencies, that's why now you can target higher time frames. With currencies, you can target higher time frames, and there's good reward there. You know what I mean? Because you can't trade currencies on a 15 minutes time frame unless you're trading NAS or US30 or gold.
Okay.
So yeah, but mostly just practice on a 15 minutes time frame and 30 minutes. Just practice on this.
Yeah.
And you
I
see,
haven't yet this
see
strategy, but I can see it's making sense.
yeah, trust and believe. Once you just practice it, you will be able to see it and you'll be able to tell. You have the confidence to say, when you see this happening like this, you have the confidence to say, buy here, and for sure it's going to buy. You know, sometimes you don't have to confuse yourself, because me, I've noticed that I confused myself a lot when I was learning a lot of strategies, you know. Like I had to do smart money concept, I had to do this, I had to do this. That was all noisy to me. If I just knew to say, this is how simple Forex can be, I would have just been profitable already by now. You know what I mean? If I knew saying, Forex doesn't have to be complicated, we just complicated ourselves. You want to put what? You want to put order blocks. You want to put a lot of lines to complicate you. You're just confusing your mind. Just simple. Identify the trend. You know, you should know if the market is on an impulse or a correctional phase. That's also important. You know what I mean? Like, because you'll be able to tell, saying, okay, this is a trending market, or this is just, you know, ranging. Because if it's correction, meaning it's ranging, especially when you see it on maybe 4 hours time frame, on a daily time frame, you see to say it's correcting, you know, to say, okay, it's just ranging now. And when it's ranging, you can actually make good money off it. You know, there are people that don't trade when the market is ranging, but if you see a market ranging in like a daily time frame or 4 hours time frame, for you, it's an advantage. Just start looking for these ones and you find to say you're just making money off this. You know what I mean? If it's actually, if it's on an impulse move, well and good, you can even hold for the longest. If it's, you know, an impulse, you catch a breakout, you hold all the way up to TP. You know, there are actually other trades that have good TPs, man. There are actually other trades that you find to say the trend line is coming all the way from there. The trend line is coming all the way from up, probably. Let me show you. The trades that the trend line will come from there up, and you have to hold all the way, maybe to your nearest strong resistance level like that. You know? So yeah, I think the session is even done. It has expired. So we'll just meet tomorrow. Just make sure you practice. Do you understand? Bright? Can I hear you?
Yeah, I've understood.
Yes, so practice. You have to practice. You have to be seeing this. You have to have the eye for the strategy. Like you have to see it. Before it even happens, you should know to say, okay, if it breaks that line, I'm in already. You know what I mean? But you can only get there when you practice. If you don't practice, you stop seeing these things, trust me. You have to start now going back to the market yourself. Okay, identifying to say, okay, I've seen a double top, back test, put the trend line. How can I enter this, back test? Because the only way you can become good in the market is just you alone, not anybody else. Just the work you put in. Even if you have 100 strategies, you find yourself still losing. You only need one strategy. If you can backtest it, it has proven to you to say it works. Stick to that. Do it over and over again. You become a master of it. You understand?
Can we look at something here?
Come
Can we
again?
look at something here? Can we draw the zone this way?
There's no what?
The trend line.
There's no what?
I'm asking that with respect to the trend line.
There's no what?
With respect to the trend line, can we draw it this way on the chart?
I think your what? Your network is bad. It's breaking. Your voice is breaking. Or you're saying how you can draw your trend lines?
Yes.
Yes. So this was a valid trend line here where you want to draw it. It was a valid. You'd have caught it from here. A trend line only has to have, I think, 2 touches. It's okay. It can have 3 touches. 3 touches. It's okay. The third touch should be fact. 2 touches. Mostly it's just 2 touches. The third touch should be the breakout. So like here, 1 touch was there on top. Second touch is here. The third touch was here. It was a breakout. Have you seen this?
Yeah.
So third touch should be the breakout. And even when you put it here,